Views expressed by CamaPlan podcast guests may not reflect those of CamaPlan. CamaPlan does not guarantee the accuracy of information provided by guests, nor does it endorse or recommend any individual or organization. CamaPlan is not an investment advisor, CPA, realtor, or attorney. You are encouraged to conduct your own due diligence before making investment choices. For any tax, legal, accounting, investment, or other questions, please consult a specialist. Welcome back to the Road to Financial Freedom, where experts share stories and secrets to unlocking financial independence. This podcast is brought to you by CamaPlan, a self-directed IRA administrator focusing on educating investors on how to grow retirement savings faster through alternative investments. I'm Ricky Trong, CamaPlan team member and podcast host. In each episode, we're going to take an in-depth look at the many roads taken to financial freedom and how they differ for each guest. Welcome back to the Road to Financial Freedom. Today, we welcome Zach Winter of Prosperity CRE and get to find out more about his journey. Zach Winter began his career as an attorney, and through various investments, he was able to retire early from practicing law and transitioning to being a full-time investor. He's a founding partner of Prosperity CRE and offers his clients opportunities to invest alongside of him in cash flowing investments that build long-term wealth. He does also have another business, which is called Cornerstone Investments. Please welcome our guest today, Zach Winter.
Hi, Ricky. Nice to see you. Thanks for having me on the podcast.
Thank you so much for being here. I'm so excited. So to get us kicked off here, I'm really excited. Just give me a little bit of background about you. We already know that you were an attorney. So give us our journey, how you went from attorney to investor. I think that's going to be really interesting for our audience to hear.
Sure. So I am an attorney, though I don't practice law at this point. But when I began practicing law as a young attorney right out of law school, one of the first things they teach you is how to fill out an hourly timesheet. And I billed my clients for my time on 10-minute increments. And so the longer I worked, the more I billed, the more money I made my law firm. And that creates an incentive to work as many hours as possible to maximize your profits. So as a young attorney, I was spending long hours at nights and on weekends in the law office. And I quickly realized I was trading my time for money. And that's really what most employees do, right? They're trading their time at work for a paycheck. And so I began to save my money and to invest it in real estate. Initially, I began buying single family homes and renting them out for additional cash flow. And so slowly over time, I began building these multiple streams of revenue from initially homes that I had bought and rented out. And eventually I scaled up to larger, small apartment complexes and then larger. But over time, I built up that ongoing cash flow. And eventually I was able to create enough cash flow from my investments so that it could replace my W-2 income as an attorney, and I could become a full-time investor. And that's what I do now. I have a couple of investment companies that you mentioned, and I look for investment opportunities that create ongoing cash flow and build long-term wealth. And my clients have the opportunity to invest alongside me so that they also can invest in the same things that I'm investing in and receive their share of the cash flow and profits on when we sell the assets as well.
Wow, that's really interesting. So basically your clients are, entrusting you. If you're trusting that investment, then they're going to follow in your footsteps. That must be really empowering for you. I love that.
Yeah, I really enjoy it. I enjoy educating people. I enjoy helping them along their journey towards financial independence. And, when I first began investing, I didn't, I had to read a lot of books because it's not something they teach you in school. It's unfortunately one of the faults of our education system here is they don't teach you about personal finance, right? And so when I first started out, I read lots of books. I read a lot of books that people still read, like The Millionaire Next Door or Rich Dad, Poor Dad, or The 4 Cash Flow Quadrants by Robert Kiyosaki. And once you start reading those books and then you start networking with other people that are investing, you kind of figure it out. But through our investment companies, we kind of give our investors a leg up in not having to do as much of the homework, and they don't have to do it all on their own. they can invest passively alongside us and receive kind of the same cash flow and benefits that we're receiving.
That's amazing. I love that. And it's so funny. Everyone that I've spoken to so far this season on this podcast has mentioned Robert Kiyosaki one way or another, Rich Dad, Poor Dad. I mean, I was getting so like crazy about needing to know about him. So I started doing an audio book on him and listening to Rich Dad, Poor Dad. And it's really opened my eyes. It's been crazy. And I've only been like on the first couple chapters so far. So I'm excited about that journey for myself. But wow, that's really interesting what you do. I mean, you seem to want to make sure you have value added investments for your clientele. Can you tell me like what type of investments you look into or what makes it seem like a good investment to you in your personal opinion, obviously?
Sure. So I look for a couple of things let's focus on real estate for a minute. I generally will clump real estate investing into two broad categories. There's lots of different ways to invest in real estate, but the two broad categories I look at are real estate investments that create chunk money and real estate investments that create ongoing cash flow and investments that can do both. So what do I mean by chunk money? Let's say you're going to flip a house. You buy a house, you fix it up, you sell it for a profit. When you sell it for a profit, that's your chunk money. But while you're fixing it up, it's not creating any ongoing cash flow. In fact, you're putting money into the house to fix it up. Similarly, if you buy a piece of land and you want to develop on it, you want to build something, that'll create chunk money when you eventually sell it. But while you own it and you're developing it, there's not any ongoing cash flow. So I like to look for opportunities where I can buy something, it's tenanted, the tenant is paying me rent, the rent covers all of the ongoing expenses, plus gives me some additional cash flow into my pocket at the end of each month. And then that property is also appreciating in value so that when I sell it, the profit is my chunk money at the end. And so the way you really maximize that is to look for value add opportunities. And so an example of a value add opportunity is identifying ways you can increase the ongoing cash flow, and that'll increase the overall value when you sell the property. So let me give you an example. Let's say you have an apartment building, it's a 100-unit apartment building, and you are able to look at similar apartment buildings in the neighborhood, and you see that other apartment buildings that have the units fixed up and refreshed are making, let's say, $250 more per month in rent than you're making. And you decide that if you, let's say, upgrade the carpet, new paint, new lighting fixtures, maybe some additional cabinetry in the kitchen, that'll cost you about $5,000, but then you'll be able to realize that additional $250 per month per unit in rent. So if you do the math, you have a 100-unit apartment, $5,000 per unit to fix them up. That's $500,000, right? $500,000 to invest in that apartment complex to fix up the units to get the $250 per unit per month. So $250 per unit per month is $25,000 a month. That's $300,000 a year in additional income. That's a really good return on your investment, right? You invest $500,000 in less than 2 years, you've gotten your initial investment back, and the rest is gravy. But what's really powerful is the additional value you've created in that investment. So in commercial properties, the value of the property is based off of the net operating income, or NOI. So we take the NOI, we apply a capitalization rate or cap rate to determine the value. So let's say in the market that your apartment building is in, the going market rate is a 5 cap. Buyers are willing to pay a 5% cap rate for that property. So you have created $300,000 in additional revenue or net operating income. You divide it by a 5% cap rate. That means you've created $6 million in additional value in that property off of an initial $500,000 investment. That's really powerful, and that's really how you can exponentially increase your long-term wealth. So that's what we look for, value add opportunities where we can not only increase the ongoing cash flow, but really increase the overall value of the property. And that really increases your long-term wealth.
Wow. Wow, thank you for breaking down the numbers for me, because honestly, I'm not a numbers person, but to hear it broken down so eloquently, it makes a lot of sense to especially me as a new investor. And I know there's a lot of new investors out there that are, thinking the same thing. So tell me a little bit more about building that long-term wealth. Like what goes into that? I mean, I know you said there's obviously all the numbers and having a property that's going to appreciate quickly, but what about, a harder scenario where you just want to make sure long-term wealth is accessible?
Yeah. I think it goes back to education. I think everybody has the ability to become financially independent, but they need to know how to do it. And so they need to educate themselves, and they need to be diligent in saving money and investing wisely. So I'll give you an example, because you don't learn this in school. When my daughter, who's in college now, but when she was very young, I gave her an allowance. And when I gave her the allowance, I said, here's your weekly allowance. You could spend it however you want. But if you put it in the bank and save it, at the end of each month, we'll call it the bank of dad. I'll give you 10% interest every month on whatever the balance is. Now, that's a huge amount if you annualize it, 10% compound interest.
Hey, but I want the bank of dad.
There you go. But it really gave her, the ability to see the value of saving money and really how her money could build more money through compound interest, right? And so I think it's understanding the value of compound interest, the freedom that cash flowing investments can provide you, and understanding that you need to be able to save money in order to implement these plans. Unfortunately, in the US, I think most of the people that live in the US don't have more than a few months of expenses saved up in their savings account, which is really unfortunate. So I think if you can educate yourself and you could control your expenses, so you're living within your means, and you can start saving money, then you can start investing. And there are lots of options out there on how to invest. I mean, you can start like I started, buying a single family home and renting it out. You can invest with companies like mine, where you're investing alongside us. So, the big benefit of investing alongside a company like ours is you can invest in a multi-million-dollar, high-quality commercial real estate asset without having to have millions of dollars. Typically, the minimum investment for us is $50,000. And for that, you're getting all of the, rights of ownership that you would have if you were owned 100%. You get the ongoing cash flow, you get the depreciation tax write-offs, and you get your share of the profits when we sell the properties. So there are lots of options out there.
Wow, that's good information to know, because I don't think a lot of people that are starting out, like even myself, I wasn't aware that you could still get all the benefits, even if you're just doing a small portion of investments into something. So that's really interesting. Thank you for educating me on that, for sure. Education is always a huge factor when it comes to understanding anything in general, but especially wealth and how to grow that wealth. So I really appreciate that. So tell me about like long-term wealth in the forms of retiring early. Is that something that's possible for, say, someone my age? I'm 33. Is that a possibility of retiring early?
Oh, absolutely. There's that whole financial independence, retire early, or FIRE movement, right? And there are lots of ways to do it. I think initially the FIRE movement, which started, a few decades ago, was based on really, really living frugally, like taking 50% of your W-2 income and socking it away and investing it. And I think originally it was the savings methodology was more targeted towards investing in like an index fund. Okay. But since then, it's really morphed into people recognizing there's lots of different ways to invest. And so if you're able to invest in things that create ongoing cash flow, which I'm an advocate of, then you can really figure out how to replace your W-2 income earlier in your career and retire earlier. So initially it was a philosophy of being incredibly frugal, living within your means, and having a kind of a minimalist lifestyle. And recently there's been kind of a split in the FIRE movement. So now there's something called fat FIRE, where you're not living overly frugally. You have a certain lifestyle that you enjoy, and you don't want to compromise too much. You're still living within your means and saving, but you want to have more than a minimalist lifestyle.
Mm.
So
yeah, that sounds like more the lifestyle for me. I'd probably go that route if I learned that. Definitely. I mean, I do like, get my nails done and my hair done. So
there you go.
Oh man. So can you tell me about a time that maybe you had to overcome an obstacle within your finance or your your investing that maybe it was a bad investment or something you just look back now and I wish I knew that sooner?
Yeah, well, I'll tell you my worst real estate investment, and it was a lesson, right? You either learn them or by reading books like Robert Kiyosaki, or you learn them out in the real world.
Yeah.
And a real hard lesson I learned was the first commercial property I ever bought, and this was back in, I think, the late 90s, was a mobile home park. I bought a small mobile home park. I was attracted to the cash flow. And I thought I could manage it from afar. And the park was located in a small town in Arizona called Yuma, Arizona.
I know it.
You know it, yeah.
I do.
So as you know, it's relatively small. It's a military-based town. It's hard to get to, right? There's no airport that goes into it. I live in Los Angeles. It's like a 5-hour drive to get to it. And it was really a Class C at best mobile home park. And it ended up being a huge headache. And so, it cash flowed well when everybody was paying their rent. But when people stopped paying their rent, the cash flow goes down. And it became very, very management intensive. And so the profits weren't at all what I thought they would be when I just penciled it out on paper, because I didn't factor in the tenant class. I didn't factor in all of the costs involved in maintaining it. And so there are things you learn when you're out there. And one of the lessons for me was I personally don't like investing in Class C or lower properties. I prefer to invest in Class B properties. I don't like Class A because you're really paying up for that trophy and you're limited in your upside. As I mentioned, I look for these value add opportunities. So I'm circling around these Class B category properties, looking for ways to increase the value to bring them up to a B plus or A minus. But that park taught me, like, I really am not suited for something that's overly management intensive. It's incredibly time consuming. You're not going to get the potential cash flow on paper unless you're very on top of the management. And that was a lesson for me.
Okay. Yeah. I mean, you live and you learn at this point, but I mean, has that helped you with your investing going forward, that you look deeply or more deeply into what you're investing into? Or give me a little information of how your thought process maybe of when you're looking into a new investment.
Sure. So that's a good question. So, partially based on that, when we look for investments, we're looking in very strong markets, large markets. We have over 20 different metrics just analyzing the markets and the neighborhoods that we look at. But we're looking in markets that are showing population growth, net migration growth, job growth, income growth. We're looking for markets that are looking to attract people to move there. We're looking for markets that are friendly towards businesses and towards landlords. And we're also looking in markets where there are really good, best-in-class management companies. So one of the reasons we target larger apartment buildings and larger commercial buildings is the best-in-class management companies are going to be working on those larger properties. They're not going to want to manage single-family homes or 2 to 4 units. It's just not profitable for them. So if you're buying a single-family home or a 2 to 4 unit, for example, in another area, you need to find management that can be really spotty. You get a real mixed bag at that level. But at the higher level, there's a better selection. And if you look at a market large enough, like we do, there should be a good selection of top quality, best in class management companies to help you manage that property. And so that's what we target is areas not only where there's income growth and population growth and job growth, but also large enough areas where there are really best in class third-party property management companies that you could turn to assist you. And if one doesn't work out, you've got a fallback or two.
Mm-hmm. Yeah, no, definitely. I mean, having a great management team is always the key to success. I feel like in any type of business, but definitely when you're managing people, making sure rent is being paid, making sure upkeep is done for the home. I mean, I can attest to that myself. Personally, I'm managing our rental. I think I had mentioned this when we had spoken a couple of days ago. But yeah, I mean, my husband and I were renting out our townhouse, and if something breaks, I mean, it's on me to go find, the person to figure it out. So, I mean, luckily that home is in close proximity to where we are, so I can do that. But I can imagine if I were to invest out in Arizona, I'm currently in Pennsylvania, but I went to school out in Arizona. I have all my friends out there. So if I were to invest out there, I mean, I think there was one time I was like, oh, maybe my girlfriend from college would want to, have a second job and be a manager out there,
Right.
But yeah, I mean, that's a lot to think about, is the teams that are working for you to make sure that your investment is proactive and continuously being successful. Thank you so much for that insight. I really appreciate that.
Sure.
Yeah. I just slipped my mind what I wanted to ask you. And so you had mentioned that you are more into like a commercial type of property where there's multiple, tenants, things like that.
Yes.
Do you do, is it tenants as in like people living there, like apartments, or is it big complexes where people work? Or do you do any kind of small investing with single family homes anymore?
I still have a few homes that I've had for a couple of decades, and those are fine. But for our newer stuff, I do look for larger commercial property investments. We do apartment buildings. We also do office buildings, industrial flex office buildings. So there are different types of tenants. They could be office tenants, they could be industrial flex office, or they could be residential tenants. I tend to focus on investments where there are multiple tenants in the property. That's a way to minimize your risk. So if a tenant moves out, you've still got cash flow coming in from the other tenants.
Sure.
Whereas if, for example, you were to buy, a single tenant property, whether it's a single tenant triple net lease like a Dollar General store or a Dunkin' Donuts or some other single tenant, if they move out, then you have no revenue coming in. And so you're responsible for paying that income or paying your expenses until you replace that tenant. So I look for opportunities where there are multiple tenants.
That's really smart because, yeah, I mean, if someone, say the Dunkin' Donuts goes out, I mean, you have to first pay that mortgage basically, right? Or the lease. And then you have to find someone else to take over that. And that could take a while. I know that, I've had an experience where we were going to buy a restaurant, and I know commercial units can take a long time for them to even make a decision if they want to go through with it. So
that's right. That's
from my experience.
Yeah, that's right. And then you've got to pay for the cost to do the tenant improvements that you've negotiated with the prospective tenant that the landlord's going to be responsible for. If there's a broker involved, you've got to pay that broker a commission to place that tenant. So there could be additional expenses just to place in a new tenant.
Never thought about all the extra, work that goes on besides that, just being an empty lot. So that's interesting. Thank you. So what about, what would you consider an emerging market? Tell me about that. Like I know you said what you look for in an emerging market. Is there specific markets like that are emerging or that you are definitely looking into at this point? Maybe it's not something happening now, but something you're looking into the future.
Yeah, so I think, there are lots of markets throughout the country where you can get good cash flow and where there's that population growth and job growth. I think, broadly, you could categorize those as emerging markets as opposed to areas on the coast where the prices are so high, it's virtually impossible to get them to cash flow right out of the box without doing something significant. And then places like California, where there's a net migration of people leaving the state, right? And it's very expensive to do business here. I would not categorize California as an emerging market, but some of the emerging markets, I guess, that we look at, that we invest in, include markets in the Midwest and the Southeast. So, we like, for example, Kansas City. That's a very strong market. North Carolina, South Carolina, those Southeast Sunbelt states do very well. We like Nevada, Las Vegas, Phoenix has gotten quite pricey, but it's a very strong market. There continues to be a lot of migration there, as well as Texas.
Yeah, especially when like big companies are moving out of California and going to these other, I guess that would be a trend to follow as well, huh?
Yeah, that's really a good point. I think that is a good trend indicator is to look at where companies are moving. And as you mentioned, I mean, there's a lot of companies moving out of California to Texas, for example, and some are moving to Phoenix.
Yeah,
and some are even moving within California. For example, you can have within California, like the Inland Empire is one of the strongest submarkets in California. And so in that sense, it's kind of an emerging market because you have a lot of people and businesses moving there. It's a lot less expensive there to do business and to buy the real estate or to rent the real estate.
Yeah. And especially if the business is, making the client or the workers an offer where, to move with the company. I mean, there's going to be home growth, there's going to be job growth. Yeah. That's a really great way to put it. I really appreciate that insight.
Yeah.
Do you think there's a specific characteristic that a good investor holds besides just knowledge? Is there anything like that really makes someone a good investor or a successful investor?
I think with real estate, it's important to keep in mind that you're not just buying a piece of property, you're buying a business. And so you need to be able to analyze the numbers, right? You need to be able to do your, business plan and look at, what am I paying for this property? What are the ongoing expenses? What's my projected income? If I have a value add concept that I'm going to implement, what is it? What's it going to cost to implement? What's my expected return? You need to do we call it underwriting, and you need to do that underwriting before you buy the property. So you really have a good handle on whether it makes financial sense and not just based off of emotion that I like this property or I think it'll be good, but actually sit down and do the numbers.
Yeah, definitely. I mean, sometimes emotion does take over and you really have to, I wouldn't say block it out, but definitely listen to your head, not your heart kind of thing.
Yeah. And that can really come into play, right? If there's a bidding war, right?
Yeah.
If there are multiple, which has happened recently, in the past few years, it's been a very hot real estate market. And you get into these bidding wars in commercial real estate, they have best and final offers. So you put in an offer and frequently they'll say, okay, well, you're included in best and final along with some other X number of buyers. Now tell us what your best and final offer is. So you're essentially bidding against yourself and coming in and raising your initial offer and trying to anticipate, what the other potential buyers are going to pay. And, it's going to go to the buyer who ends up more often than not, who ends up paying the most money for it. So,
wow. Wow, that's interesting to know too. I mean, I never really thought about it. Yes, I've gone through the process of buying a home, but I mean, even at that time, we made an offer a little bit above what they were asking because we were like, well, it's a beautiful house, it's so perfect, and I was like, I need it, And my husband's like, well, okay, but we don't want to go too crazy because then if no one else bids or no one else puts in an offer, then it's just us being overly zealous and.
Right.
Yeah. And is the market value there, I guess.
Yeah, you're exactly right. And that's why it's important to really go back to the numbers, right? And figure out, we call it, what's your strike price? What's the maximum that you can pay and still get the returns that you want to get? Yeah. And for us, the returns that we need to provide to our investors.
Wow. Yeah, no, that's a great way to think about it. Thank you.
Yeah.
Tell me, do you have any fun stories of investing that, maybe it's a property you've had for a long time or something that just made you really happy inside when you first started to invest, maybe? Tell me about, a fun story you have.
Well, I don't, one of the first commercial properties I bought was an apartment a hotel in Austin, Texas. It was a 72-room hotel, and it was kind of the first syndication that we did, and it was mostly friends and family. But we bought in Austin, and it's maybe 10 years ago now. And so Austin was appreciating, but it hadn't taken off nearly to the extent that it's taken off now. And we had planned on that being a longer term hold, but the market just became so hot. It just, we just were able to ride that market up, and that was a really fun experience.
Wow, that's great. So it sounds like it was a really successful and really, it helped you grow as well as investor. What about for our audience? Can you explain what a syndication would be? Just in case they've never heard the term. I know I'm pretty new to that term, so I would appreciate that.
Sure. Yeah. So that's the way we essentially work at my firm is we pool investor funds together to buy our investment properties. So investors will invest with us. They invest passively. We handle all of the work. And by pooling the funds together into what are called syndications, but they're basically groups of investors, that gives our investors the ability to invest as little as $50,000 in a multi-million-dollar investment opportunity. And by doing that, they're getting the ability to invest in these quality assets, and then they get the cash flow that the asset spins off each month or each quarter, and then they get their share of the profits when we sell the properties.
Wow. Thank you. That was really well put. I really appreciate that. And is there certain ways that the money can be raised or given? I know that self-directed IRAs like CamaPlan here, we actually have access to being able to invest through syndications through your self-directed IRA. So tell me a little bit about what other ways that can be done.
Yeah, that's a great way to invest, is to invest via a self-directed IRA. And we have a good percentage of our investors who invest via self-directed IRAs. And so when they do that, the ongoing cash flow goes back into the IRA with it, whether it's, as you know, whether it's a Roth IRA or not. And then the profits on sale go back into the IRA. The other alternative is for investors to invest directly out of the IRA individually, either in their own name or they may have formed their own entity to invest. But when they do it outside of the IRA or their retirement account, they're getting the cash flow, the ongoing cash flow into their bank account, and they can save it or spend it on an ongoing basis. And then also the profits on sale. That's the other way. And then typically when we go to sell the property, if it's a real estate investment property, we'll look to 1031 exchange. And then that'll give our investors the ability, we call it cascading up. So when we sell a property, we look for a property to buy, take the proceeds from the property we're selling and buy a larger property that gives our investors the ability to continue to get ongoing cash flow and build long-term wealth as we implement that value add strategy on that next leg up property.
Wow, that's really interesting. It's really eye-opening how many different ways that, one can get money or one can put money into an investment where, they're not putting that whole $300,000 down for a home by themselves. They can, it can be done with a group of people and you can all own a portion of that. It sounds like almost like what I guess a mutual fund, like in the terms of a stock, it's kind of similar, but just for real estate or property. So that's really interesting. Thank you. I really appreciate that information. And it's helping me learn too, the more I talk to everyone on my podcast. And it's just, I love having people that are so insightful and so interesting, just giving us, more knowledge. And that's what it is, right? Knowledge.
Yeah, that's right. That's exactly it.
That's awesome. Right. Thank you so much, Zach. That is incredible. So why don't you tell me, is there any type of new investment that you're looking into now or in the future? Tell me a little bit about that. Are you moving away from real estate? Are you going to stick with it? And what else? What is there to come?
Yeah. So one other investment that I've been doing for a while, and I'm now creating a syndication or fund with, is Bitcoin mining. So I've been investing in Bitcoin since 2017, and I've been mining personally, and it's been very profitable. So, for those that aren't familiar, Bitcoin is a digital commodity. It's got scarcity. There's only going to be 21 million Bitcoin ever created. They've created over 90% of it. So over the course of the next 104 years, they'll create the rest of the Bitcoin, and that'll be it. So there's a real scarcity to it. And all of the transactions for Bitcoin, when people buy and sell Bitcoin, it's recorded on a digital ledger called the blockchain. And so Bitcoin miners are basically very powerful computers that are verifying all of the transactions that go onto the blockchain. And when they do that, they're compensated. They get paid in Bitcoin for doing that. And so with my Bitcoin miners, I basically am participating in that process. And every day, I receive Bitcoin into my account for doing that. and it's a great way to create additional cash flow. And so it's been going well for me. So I'm now creating a Bitcoin mining fund where our investors, again, can invest passively through this syndication and receive Bitcoin revenue on an ongoing basis. On a monthly basis, they'll get Bitcoin distributions.
Oh, wow. Thank you for talking a little bit about Bitcoin, because that's always been a very interesting topic for me that it confuses the heck out of me. So I didn't know that there was a cap on how many they're going to, or how much is created. So that's really intriguing. Thank you.
Yeah. It's one of the factors that really differentiates Bitcoin from any of these other cryptocurrencies. For most of these other cryptocurrencies, the people who created them can create additional amounts and thereby dilute the owners of that currency. But with Bitcoin, the scarcity is a huge element. It's a huge benefit of Bitcoin.
Wow. So it makes it more precious almost, in a sense.
Exactly. That's a good word. It's kind of like digital gold, right? There's a finite amount that's going to be created, and there's never going to be any more of that. And so just on basic supply and demand principles, as Bitcoin becomes more and more popular, as more people invest in it, that increases the demand, but the supply is limited. It's finite. There's only a limited amount. Yeah.
Right. So the price just will go up once it's gone. I'm assuming that's how that'll work, right?
Yeah, that's right. So if you look at it over time, the price goes up. And so for example, the way the Bitcoin miners work is every 10 minutes they're verifying a new batch of transactions, and they get awarded a certain amount of Bitcoin. Right now it's 6.25 Bitcoin. Around every 4 years, that amount gets cut in half until eventually in about 104 years, there won't be any more Bitcoin awarded. But that's how new Bitcoin gets issued. So as you reach these halving events, which is in about 2 years is the next one, it tends to be preceded by a new bull market because the supply is being cut in half. So supply demand, dynamics come into play, and it just drives up the price of Bitcoin into a new bull market.
Wow. And I know you're going to be talking more about this. We have an upcoming webinar here at CamaPlan with Zach in regards to the Bitcoin. So if you are intrigued and want to know more, he will be doing a webinar with us. Could you tell me the date of that, please?
Yeah, I think that's August 10th.
Okay. Yeah. August 10th. I mean, we'll be posting about it on all of our socials, and we'll be really excited about that. So I think that'll be a great lesson and a great learning experience for all of us. I'm going to tune in for sure. Well, I guess at this point, Zach, is there any advice you can give or any kind of experience that you can pass along to new investors here before we come to the end of our show? Give us a final statement, final word, things like that.
Sure. I love investing. I'm always happy to help people out. And so feel free to reach out if you have any questions or want to chat. But I'd say, take your time. Don't put all your money in one investment. Diversify and just educate yourself. I think that's really important.
Yeah, it always comes back to education. I feel like that's how I'm ending all these podcasts this season. Yeah. Educate. And that's great, because the more you know, it's obviously, the whole old saying, knowledge is power. So
that's right.
Thank you so much, Zach. I truly appreciated you being here today. I learned so much, and I hope our audience has learned so much. Please stay in touch with us. We're super excited about your webinar, and there's so many great things that are to come with you and CamaPlan, and we'd love to just stay connected. So please make sure you do. Okay.
Thank you, Ricky. Really enjoyed it.
Thank you so much. And I just want to say thank you to our sponsor, CamaPlan, our producers, Honeycomb Productions, and of course, Zach Winter, our wonderful guest today. Make sure to check out our QR code right here. If you're watching on YouTube, it's going to have all the links to all of Zach's companies and where to find him. And please also follow ProsperityCRE.com, as well as Cornerstone Investments. Those are Zach's two current companies, and he has great information on those websites. The links will be in the description. And for more information on CamaPlan, please go to CamaPlan.com. We will inform you about self-directed IRAs, and you can request a consult with an expert, view our media library with our webinars, which Zach will be appearing on in the next couple of weeks, and you can open an account today. So thank you so much for listening, and remember to like, follow, and share our podcast, The Road to Financial Freedom, to continue with us on this journey to the path of finding success.